Hello everyone, welcome. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details, and you can activate your Demat account within 24 hours. Also, you will get intraday recommendation calls and you can learn robo trading software for free. Now, let's see what pledging of shares mean. Pledging of shares is one of the options that the promoters of companies use to secure loans to meet working capital requirements, that is, for the day to day running of the company, or personal needs and fund other ventures or acquisitions. A promoter shareholding in a company is used as the collateral to avail a loan. Now, purpose of pledging the shares: to create a security for the loan borrowed by the same company, or to raise money for conversion of warrants of the same company into its shares, to create a security for their personal loans or loans taken by other business ventures, or to raise funds for purchasing further shares of the same company from the secondary market. These are the purposes for pledging of shares. Now, let's look at the features of share pledging. There must be a bailment of goods, that is delivery, or the delivery of goods must be a way of security, and the security must be for payment of debt. Now, why do promoters pledge shares? One of the methods promoters use to raise finance is to take loans against holdings in their company from banks or non banking financial companies, that's also known as NBFCs. For these financial institutions, these shares are collateral. Promoters can raise funds for various reasons for meeting requirements of the business or personal needs. Now, can pledged shares be sold? Banks can sell the pledged shares if the price of the stock falls closer to the value agreed in the contract between them and the company. If the promoters are not able to top up the collateral, the lenders can sell the shares to maintain this margin. Now, why is pledging of shares risky for the shareholders? While pledging of shares, the promoters use their stake as collateral to get the secured loans. During a bull market, pledging of shares as the market is moved upwards is not an issue, and the investors are optimistic. However, the problem arises in the bear market. As the price of the stocks keep fluctuating, the value of the collateral against the secured loan also changes with the change in the share price. However, the promoters are required to maintain the value of that collateral. In order to meet up the difference in the collateral value, the promoters have to cover the shortfall by either giving additional cash or pledging more shares to the lender. Now, let's look at the impact of share pledging on share price. Pledging of shares of a company by promoter can be seen as weak financial health because pledging implies that the promoter was not able to raise capital in other ways. The promoters pledge their entire shareholding in the business with a bank or financial institution to raise capital. Well, they can pledge their entire shareholding or a substantial percentage of it. Because of the pledging of stocks, these companies' stocks can be bought by rival companies to increase shareholding or even take over in some cases. If the promoter is not able to make the payment, the lender has the option to sell the pledged shares in the open market. This results in an increase in the number of shares and hence stock price comes down dramatically. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. And once you upload the relevant documents, the account will be activated within 24 hours. You'll also get intraday recommendation calls and you can learn robo trading software for free.